If you are a business owner and you're wondering if you need insurance, well, you're in luck. Today's video is for you. Today we're going to talk about 6 ways business owners and entrepreneurs use life insurance. Okay, so let's talk about the first way. If you have built up a successful business and based on your financial plan or your estate plan, you realize that you will have to pay estate taxes, then life insurance may be a cost-efficient alternative as to just paying straight up cash from your estate. Then the most tax efficient thing to do, and the most tax efficient and also just cost efficient thing to do may be to use life insurance. Life insurance may amount to pennies on a dollar of what you would pay. So if you have estate taxes, an alternative instead of just paying cash may be life insurance. Another way you may use life insurance is for estate equalization. A good example of this is if you're a parent and you have 2 children. One child works in a business, the other does not, and you want to leave the business to one of the kids. Of course, the one that's working in a business as a more practical step, but you want to leave an equivalent amount to the value of the business. Then what you would do is get the valuation of the business and have a life insurance policy that equals that amount for the business. It's not an exact science, because if it's a business, of course, the business value might go up, the business value may go down, but at least it's a start in the right direction, and it's somewhat equal as opposed to having, your 2 kids running the business, which may not be a practical thing, and in terms of they may not get along for one, or from a practical standpoint, though, the child that's not involved in a business might be completely disinterested or want nothing to do with the business. So from a practical standpoint, you may just want to leave the business to one child and then have a life insurance to an equal amount of the business to the other child that's outside of the business. Would you want to be partners with your partner's spouse? If the answer is no, then funding a buy-sell agreement may make absolute sense. And essentially what that is you're using a corporation to buy life insurance, and if your partner passes away, then those funds would be paid to the corporation, and the corporation would use those funds to buy the shares from the surviving spouse, such that now you would be the sole owner of the corporation, and the surviving spouse would receive an equivalent of what would be the value of the shares that the person would have given to you. So that's what we talk about when we say we're funding a buy-sell agreement. So if you want to facilitate a smooth transition of ownership should your partner pass away, then this is an option, and this is where life insurance would come into play. And a huge benefit, of course, is that because it's life insurance, those funds are received tax-free and paid out tax-free. Do you have an individual in your company that is very important, such that if you were to lose that individual, it would cause financial strain or financial stress on your business? Then a key person insurance is what you may be looking for. And what the key person insurance does is it gives you funds should the person pass away to get someone else who would replace that individual, or get someone new and retrain them. And if the person is really exceptional, you may need to actually consider, training 2 individuals, because we have seen that in the past where a business owner have an individual who's been in a role, but that role is essentially 2 roles. So if you have somebody that's important in your business, that's going to be a huge strain on your business. If they were to pass away, then key person insurance is what you may be looking for. Do you have retained earnings in your business and you're looking for a tax efficient way to pull that out? Then you may consider life insurance. That's an advanced strategy, and we'll probably talk about that in a different video. But if you have retained earnings and you're looking for potential ways to pull that out in a tax efficient method, then life insurance may be a method that you could use to do that. It might be an alternative. Doesn't always work, but for some individual it may make perfect sense. This is where you'd have to, of course, talk with your accountant, your financial planner, your insurance agent, whoever the individual is that's professional, that's knowledgeable. Then you want to speak to those individuals. So that's the 5th way that you could use life insurance as a business owner. And the last one is philanthropy. So you may, give back to your customers, but sometimes you want to give back to your community. Because of course, you know, they have probably given back to you, or maybe they haven't given back, but you just want to do something for the community, and you identified a charity that this would make absolute sense for you to give to. Then, you know, you could contribute funds from your corporation to that charity, and a huge benefit actually is, you know, the tax benefits to that. Now, in most cases, the tax benefits are secondary. Most people are just wanting to give back, wanting to be generous. But what they identify after is that there's a benefit to giving back. And after they realize what the benefit is from a tax efficient standpoint, then that's an added plus. But if you just want to be generous and give back to the community, then philanthropy is the way. And you could actually purchase life insurance in your corporation. And when the person passes away, that amount can be paid out. Or you could actually purchase it now, give it to the charity. The charity gets a benefit of the cash surrender value of the policy now, or if dividends are being paid out, if it's a participating life policy, then the charity has access to those dividends. So those are the 6 ways in which you could use life insurance as a business owner. Hopefully this was helpful. If it was, like, share, and subscribe. Take care.